Ladies and gentlemen, welcome to another episode of CEO Insights hosted by Radhakrishnan Chonat. In this series, we bring you conversations with influential CEOs who are shaping industries, driving transformation, and setting benchmark in their respective fields. And today, I'm personally thrilled to host Mr. Kartik Jain, the Managing Director and CEO of Shriram Asset Management Company. He has an impressive career spanning 3 decades, and Karthik brings a wealth of experience from his leadership roles in renowned organizations like Cadbury, KPMG, ICICI Lombard, HDFC Bank, and DBS. He has had a remarkable track record in sales, distribution, marketing, you name it, product management, strategy, digital business. He is also a British Chevening scholar with a background in technology and management from IIT Bombay and IIM Calcutta. And Karthik has been at the forefront of leveraging data and digital platforms to enhance customer experience and business growth. With that, let's dive into his journey, his insights on the evolving landscape of asset management, and his vision of Shriram AMC. Mr. Karthik, it's an absolute pleasure to have you on CEO Insights.
Likewise, thank you for having me here. Really appreciate being part of your this podcast and being able to reach out to your viewers.
Excellent, Karthik. With that, let's start with your career and leadership journey. You've had a diverse career across multiple industries, from starting from consumer goods and consulting to banking and insurance. Now, if I were to ask you, what key lessons have you carried forward from these experiences into your current role as CEO at Shriram AMC?
Okay, interesting question. So, see, there are 3 aspects to it, right? One, of course, is at a personal level, which is that when you go across so many different organizations and so many different industries, you have to have something that holds you through across, right?
True.
So, yeah, of course, one is that belief that you can add value to whichever team or company you're working with, and that comes from having let's say a few core skill sets that you really believe in and are passionate about, and that's helped me throughout. So, for example, essentially, I'm a person who is like I said, I look at how do you create value between the cusp of where data and technology meet to create a good customer experience. And what I've found is, whether it is a consumer goods company or in consulting across various other organizations, or in insurance or banking or even in investments, this holds true. And in today's day and age of where data and tech are the key things, it adds real value. And that's helped me across all my roles. That's one key learning. The second key learning is that when you're looking at building businesses or creating impact, there are 2 ways of doing it. One is the situations where you can create a large, let's say, a launch or a large product launch, and that creates a huge impact, immediately.
True.
The other option is that you have a insight in the customer and you launch something which is initially could be small, but you keep incrementally improving and getting better and better as you go along. It's almost like you take a long time, 1 or 2 years of planning, and then launch a big bang launch, or you have an idea and you launch it and then you keep enhancing as you go along. Sometimes, like you have in consumer goods, a large product launch is what you need to do, because you're planning. The whole planning takes time because you set up the entire manufacturing setups and so on. But often in a digital age, it's quicker and faster sometimes if you go ahead, hit the market, and then you keep iterating as you go along, because you also learn how customers react to what you're throwing at them, and the market also evolves pretty fast. So I have found, like, in today's day and age, with the rapid change happening, it sometimes helps to actually, while you may have initial thought you go to market with, but be open to keep on iterating as you get more and more customer feedback. The third thing, at a personal level, for all your viewers out there, is that to have belief in yourself, because there will be challenges along the way. There'll be ups and downs, both in the environment and in your own career. So the whole thing is, wherever you are, whatever you're doing, believe in yourself. That look, you can see it through, and whatever your dreams or passions are, stay true to them. And finally, whatever you hope for in your career will work out.
Very interesting. Let me pick on the second point you mentioned, the customer demographics and the changing preferences. Now, of course, we talked about your background in consumer digital banking and all. Now, in your current role, how do you perceive the evolving demographics and the investment preferences of the young generation of the Indian consumers. And are there any strategies that Shriram is doing that are essential to cater to this changing expectation? What are your insights that you have seen, how investment is perceived?
So there are, if you look at the dimension of each individual, right, from an investment perspective, one thing you people talk about is what is the risk taking ability, and second is how what is their maturity regarding investments. Okay, the two things very important to keep in mind. And third, of course, is what kind of interaction or what kind of medium of engagement would they prefer. Okay. Now, the first two, risk and maturity, in fact, all three are independent of age.
Okay.
It's one learning. It's mindset based.
Correct.
So I could be, a 20-year-old. I could be a 67-year-old. I would still have aggressive risk mindset depending on where I am in my life journey.
True.
My understanding, maturity of investments could also be equally diverse, right? It's not linked to age. Also, correct, how savvy or what I prefer in terms of engagement. Yes, traditionally you find that the older audience, the older customers who are more HNIs prefer physical interaction, but many of them are also going online completely, right? So when you evaluate your customer segment at one level, while yes, there are broad stereotypes in broad directions, we have to be open-minded to say, look, I have a lens to evaluate a customer by. I will not link it to any bias based on age or gender or geography, right? And that I think is a key insight that I have seen in this environment, right? So what does that mean? So that means that you have to be present in the way in which your target customer would like to consume or in partake in investments, right? It has to be in a way contextual to them, aligned to them. So therefore, if you look at if you look at the various channels of reach. So what do we have? You have the fintechs. The fintechs have all the platforms out there, and the aggregators who can reach out to online audience. You have the maybe the wealth managers, the banks, and the individual distributors, advisors who reach out to the clients physically. And you also have, let's say, people who are not currently exposed or have access to maybe investments. Could be smaller geographies, etc. Somebody who could be, let's say, even in urban markets, could be SEC, CD, or lower income strata. So when you're designing your product, you have to keep that in mind. So, for example, if you look at the first one, right, the people who are very digitally savvy. So what happens is that as a manufacturer, when I take my product to market, I have no control of what the person is experiencing.
True.
So, for example, it depends on. So, the risk profiling is a function of the online platform. They may or may not do it, right? Then the maturity, again, it depends on what they're offering and how they train their customers and how they come and consume. And third is in terms of my reach. Yes, I will be present out there in those markets, right? So, if you're launching a product, you have to realize that look, you can't control. So, all that you can do is you can be proactive, and you can position yourself in a way that helps these customers get the best out of your what you're offering. So understood. If I say, look, and then I have to keep my own brand in mind. So okay, like let's say I'm from Shriram Group. I want to make sure that people see Shriram when they look at, they'll observe us in an environment where I can control the interaction. So they'll say things Shriram. They say, oh, Shriram fixed deposits, okay, lending, etc. South conservative. They'll assume that, or they'll expect us to have more stable products because they're used to fixed returns. So when I go to market, first I have to have balanced products in mind. So for example, we have launched multi-asset allocation fund, and equity debt is a combo of equity debt and gold. So we have gone to market with balanced products that are aligned to what we stand for, where if I don't know whether the customer's risk is being profiled or not, how mature they are about the product, they should be able to understand this very easily. So that's one thing we are keeping in mind. But when I go to, let's say, the wealth managers or the individual advisors who are far more able to interact with their clients, then when we go to them, we meet them individually one-on-one and educate each of these channel partners about who we are, what our product is, how is it positioned, And more importantly, how should they position it to their clients? And what is the customer need that this product is fulfilling? So I can do a far more engaging and deeper engagement with these guys, right? So that's what we typically do. We go and meet them, talk to them individually. They understand how the product is positioned, where it is in terms of clients, asset allocation, matrix, risk return frameworks. I can take that time to explain to them, because then they will go out and talk to their customers. And the good advisors or channel partners actually want to know more, because they represent, the client's interests. The third, if you see that the customers are not, let's say, who are not really familiar with the investment category, so there obviously you have to take it two parts. Obviously, you have to take them in a way where you will. It has to be in an environment that they are familiar with,
Mm.
right? For example, um, let's say we are working with the Shriram, group channels to reach out to their customers.
Mm.
So I have to make now the way Shriram group works is that the when we go and lend to customers or even raise deposits, we build deep connect with the families, with the individual, with the families, and it's over time, over generation, right?
Mm.
So if I have to, and if let's say that the segment is in say in Bharat versus India, maybe deeper geographies, and they're not really very aware of investment. So I have to work through that channel which they are used to and comfortable with, and send my message to that channel, and make the process almost easy and simple. So it has to be either a very simple form, or if they are, if the Shriram channel already has a online app that's onboarding customers, I make it part of the app and say, look here, you already are doing, taking loans from us, or depositing your fixed deposit with us. Same individual is going to reach out to you and explain to you how Shriram also has one more product for you. Simple SIP, low ticket size, and it's very easy application process. And you observe how it goes along. And again, make sure we have very simple products available there, right? So that is you mentioned about customer insights and the new data and technology, etc. All that sounds good, but reality is that each customer segment is different in the way they, interact. It's about their mindset. And when we as manufacturers are going out, since I'm not the distribution channel, I have to make sure that our products are aligned and are able to be able to position and communicate our message very clearly in the different channels.
Very, very insightful. So you mentioned about channels of distribution. I think the moat that Shriram AMC has is the Shriram Group as such. And you mentioned, multiple generations. Truck finance in South. Any trucker you speak with, they'll have a tie-up with Shriram Finance. So, from my vantage point, I see that as a big moat that Shriram AMC has. Probably the other bank-related AMCs will have that kind of a moat. So I'm glad to hear that you are able to tap in. So at that customer, right, the non-India, the Bharat customer, you mentioned that you educate them on SIPs and stuff. How has been that penetration other than lending? Are they is Bharat now ready to take on investments other than gold and the typical real estate that we normally hear of? Are they what sort of insights can you give from that that particular distribution channel of Bharat?
Yeah, so early days for us as an AMC, because we have begun to work with the Shriram Group. But the feedback we're getting is that people, given the whole mutual fund sahi hai, the power of SIP, and all people have access now to all the digital channels like TV, etc., or even online OTTs. People are fairly familiar, right? I think the key thing is that those who haven't dabbled in it are their whole thing is either behavioral inertia or maybe risk perception. There's a bunch of guys who already are dabbling in it. So I think the feedback is that people are far more open and aware now than they were much earlier. And also their aspirations, right? The people who are parents, they want their kids to do better. They understand they have to, they're safe for their education or whatever. So they're far more open to looking at avenues that can give them that kind of maybe better returns or help them plan for the future. But one insight we also had was that, look, even because while the AMC is 30 years old, we've been in that sense slightly low key. Even the first step has been actually reach out to our group staff, because what we realized was that when they interact with the clients are going to ask them, okay, what do you think about the product, right?
Correct.
So we said, okay, what we should do is first, we have a 1.2 lakh employees in Shriram Group as a whole. Let's reach out to them first. Because once they start to adopt the product and and then they have conviction, then they'll naturally, be able to sell it or promote it or at least educate their clients or their customers. We've done that. Therefore, we've gone back and said, look, how can we times the SIPs with your salary? So we've gone to market, essentially gone to town internally, and made sure we had about literally tens and if not hundreds of VCs and internal sessions to actually work closely with their HR and with the employees to educate them on our products on SIP and how a simple SIP which can be linked to their salary or post their salary can really help build long-term wealth. And what we say is that couple of simple principles. So so your question I'm answering in a different way. I'm saying while
No.
it's important to reach out to the end customer of Shriram Group, more important is to reach out to the internal staff. So we've gone and said, look, two things. One is like Warren Buffett said, right? You should first what's important is first your income minus savings, and then you expend, then do expenses, not the other way around, right? So first thing we
True.
said is that you need to save from your income and then spend. Second is that look, we showed them the power of compounding of SIP, saying look, technically you can be a crorepati. Or that you join, let's say in 22, if you're 22 and you join Shriram Group, retire at 60, even 1,000 rupee SIP, compounding at that 13%, 13.5% per annum, can give you a crore at the when you retire. So,
True.
it's that simple. And the third is we said, look, very simple principles behind SIPs. Start early, don't stop, and keep adding. So ये तीन mantra, we must keep the three mantras in mind. So the earlier you start, the better. And we've heard actual examples, use cases, so they get the message that how starting early gives builds the corpus much more. How you shouldn't stop, when let's say the markets are down, etc. And whenever you get a say bonus or increment, when you have some cash flow, add to your SIP, and that helps you reach your goals faster. And then link it to your individual financial goals. So that's what we're doing, and that
Very,
has
very
that has seen a big positive shift. So now the people who've gone through that, they're saying, look, we want to take it to our clients. We want to make sure that we take mutual funds to our So there's a process of course certification, training, all that is going on.
excellent, excellent. And when they go with the conviction, not just trying to push a product. They go with the conviction that they
Exactly.
have personally seen the growth. Excellent.
Yes,
Wow,
yes.
that's a great distribution strategy you have. Now, as the CEO, I'm like, let's stick to the Shriram AMC point. What's your long-term vision, sort of, you have visualized for Shriram AMC, and how do you plan to shape the growth trajectory in the coming years? Because there are, I mean, obviously there is competition, 40 plus AMC. So I'm all ears to hear your strategy.
So before I go to strategy, I'll just make one statement. I mean, I tell my team as well that while all of us obviously want to build a business, we all want to create something which will have high AUMs and so on, but be clear with the purpose. Why are we doing this?
Mm.
So the purpose has to be clear, but then that's what sustains us throughout, right? So we say the purpose is because in mutual funds investments, we can change and shape people's lives,
True.
right? And people would mean not just an end customer, a customer, our channel partners, and also the all our stakeholders, right? So keep that in mind. That is a fiduciary responsibility that we have, where we can actually help shape and make a difference in people's lives by bringing them to them these kind of investment principles and concepts and products that are meaningful to them. Starting point is that. Then based on obviously, then you have question is, okay, how big do you want to be? I won't go to numbers, but basically it's a large market, right? So expectation is the next few years will be 100 lakh crores in terms of industry AUM. So, even if I have a small share of that, we'll be a large enough, meaningful, AMC. But the bigger thing is how do you get there? So how do you make sure that you build a sustainable, profitable business, that can scale over time? And actually why that's important. And therefore the principles that drive it, right? So when I joined last year, 1.5 years ago. So when I went to the market, people would say, okay, a lot of AMCs come and go. Right? How serious are you guys? I said, look, I went to ChatGPT and I questioned ChatGPT and said, tell me in the last 25 years, how many AMCs have exited, consolidated, merged, sold off, etc. So 15 names came, okay, including large global players, but not Shriram
Yes.
AMC.
Yes.
Not Shriram AMC. So our name never was there, nor will it ever be there. It's not to worry.
True.
We are here for the long term. So that's what our commitment to our clients is. So how do you build a long-term business? I said, look, so we are looking at three key pillars. One is what I call three Ps, which are basic to investment or asset management. One is performance, second is product, and third is placement. or partnership. How do you make sure you get your products to your clients? So on the performance side, so all three are important because I have to have the right performance, right product which meets customer needs, and make sure I take it, I place it well to where my our clients or investors can access it. So, and if you do this right in a in a cost effect, keeping your how do I say, costs to income in mind, and build a steady business and not be in a hurry, I think that's where we'll build a long-term sustainable business. And the example I told you, right? I can do a, I mean, I'll just digress slightly. Point I had made, I can do a big bang, blow up a lot of marketing dollars, marketing spends, and say, okay, I'll be a big splash in the market. But this is a long-term business, right? As the AUM is built up over time, as trust builds up, is when you start to also be relevant in the market. So our approach is to go step by step, build brick by brick, make sure there's a quality business you're building step by step across all elements. And as you get customer feedback, keep incrementally improving. And this 1% compounding rule. If you get better 1% every day, we'll compound and get better and better. So to come back to that, if you look at the performance piece, right? So we have specifically taken an approach where you know we are going to be different from what conventionally people would be doing. So, so the context is like this. I'll give you a small context to that. As you may have read, we have a continental approach to our performance, our investment management. The background to that is like when we spoke to our investors and our shareholders, our partners who've taken a stake in the business. They are seasoned overseas CIOs, hedge fund managers. So they said, look, pre-COVID, the interest rates were low, cost of capital was lower, there's more predictability in the business results, business outcomes. A buy and hold strategy would kind of have worked. Post-COVID, higher interest rates, higher cost of capital, a lot of uncertainty, global uncertainty, compressed business cycles. A buy and hold may not work always. So you have to, in a way, follow what the market is doing, and you have to have a quant element in your strategy. Having said that, quant requires a lot of data. It's often, it's a function of how well you can model the environment. So therefore, it's not always perfect. So you have to have fundamental as well. And the key is to work in an integrated way. Because very often what happens is people say, okay, I'll be a quant shop or I'll be a fundamental shop, and they try and then the two can't integrate that easily, right? So we said we'll take the best of both worlds. We'll have the data-based approach to that depth of quant, so we can crunch large amounts of data and be able to get insights or patterns very quickly, and we will overlay that with fundamental, such that we are able to look at the quality and of the stock picks as well as the management quality, etc. Look at the financials, the valuations, and then be able to build a high quality portfolio that performs. So the team is one. It's a quantamental team. So the analysts and they are quant analysts, they are fundamental analysts. They work very closely together, and each feeds off the other. And therefore, our entire approach is that how do we therefore build disciplined, sustainable alpha. So what this does is, in a very brief nutshell, is that and of course, So what it does is that basically you run quant models which create a portfolio for you, and which the analysts and fund managers oversee finally, and the fund manager decides finally what should the portfolio construction be. A majority is led by the quant models, and there's an overlay that happens, right? So, for example, if there's a policy change, there's a certain corporate action, or some ad hoc action, or some shift in the environment or the corporate, which the model can't pick up immediately, the fund manager steps in to take action, right? So that is how it works. The beauty of this is that when we go to market with any strategy, I can backtest it. So otherwise, you are hoping, or your expectation is that, okay, if it's a fundamental based strategy, that okay, approach should work. The fund managers hopefully has track record, and you are betting on the fund manager per se, right? What this does is that it reduces the uncertainty and increases probability of success.
Okay.
So I can do and we normally do a 10-year, 20-year backtest on our performance on the model, right? So and we know in different cycles how it performs, and we can adapt it to different strategies. So when we go to market, and even our board insisted that, look, if you're doing a quantamental approach, please make sure your backtest is solid before you go to market. So that's what we then go to market with. It gives therefore the partners and the customers also more confidence or conviction, and it does away with the need to have quote unquote star fund managers. So we'll have very good fund managers, excellent fund managers, but the idea is my my core underlying model is a star, because that removes biases.
Okay.
So
Good.
we strengthen the core model. That's our star, investment strategy, and we use the overlay of the insights of the fund manager or the analyst to sharpen it and make sure it goes to market in a better, more effective way. So you have machine plus man, right? And all of you know AI, right? AI to us is alpha intelligence. So we believe that if I bring machine plus man together, quant fundamental together, we are able to create the alpha intelligence that helps better returns for our investors. So that's the first P. I'm taking some time to explain them. That's the
No.
first P of performance. And we've deployed that across all our funds. So tech fund, we are now a quantamental fund house. So all my equity portfolios are driven by the quantamental approach across the board.
Got it. Hmm.
So even when you do a new product, new fund launch, we go to market saying, look, we've done the backtest of our core strategy, and this is the kind of the backtest direction and results. So we have confidence on whether we can deliver going forward or not. Yeah, second, of course, the product, we want to make sure that we have a good offering. Two things: one is a good offering across the risk return spectrum. So people have with shorter term goals would look at debt funds, more medium term goals look at hybrid funds, and longer term obviously equity is there, beyond 5 years kind of stuff. So we have good representation across all these three segments. We're launching a liquid fund in November, and we're also launching a new equity fund, which I'll talk about later in November as well. So then we'll have three funds in debt, overnight liquid ETF as a liquid fund, and we'll have three in hybrid, your balance advantage, aggressive hybrid, and multi-asset allocation, and three in equity, flexi cap, tax saver, and one more which is the launching Shriram multi-sector rotation fund. So good representation across all. The second dimension to this is to make sure that whatever we go to market, like I mentioned earlier, we have consciously gone with more balanced products, not with niche products, because we want to make sure that clients who are coming out to us for the first time have a balanced, because mid cap, small caps can be volatile.
Correct.
So at this stage, let's go with more balanced products which meet clients' asset allocation needs, whether it's across market cap, which is flexi cap can meet that, whether it's across asset classes, which the multi-asset allocation fund does, your equity, debt, and gold, or whether it's across sectors, which is our next NFO, which is the multi-sector rotation fund. So, and within that, the idea is to see how well we can basically be a bit different in how we go about launching the products or the solutions we introduce. So that's on the product side, and also we've final point on that is that we've kind of followed a barbell strategy, on the products as well. So we've got, if you will, the mutual funds which cater to the mass, the mass affluent and the mass segment. We've also got our PMS certification, the license, and we'll be launching our PMS in this quarter as well, which caters to ultra HNIs and HNIs. And we also have our fixed income book, I mentioned liquid and overnight, which basically caters to the institutional segment, right? So across the volume margin mix, we have well represented in terms of products for the entire client segment, client sets. So I can cater to right to the your Bharat or your rural India, as well as to the ultra HNIs and to institutions.
Mm.
So that's the thinking, that when you go to market, because and there's obviously cost linkages across all, right? The CXO who I go to for pushing my liquid fund or offering my liquid fund or overnight is also a person who can invest in my PMS or my mutual funds.
True.
And the same person is also probably investing in fixed deposit through Shriram fixed deposits. So it's like how do you leverage all those interconnections, and that's how you build up more longer term kind of business and strategy. And third, of course, is placement. So, I mean, that, of course, is more distribution based. We're working closely with the Shriram Group channels, we're working with external channels across all, whether it be the physical channels, right from the advisors, the IFAs, MF distributors, the national distributors, the wealth managers, the banks. We're also working with the digital channels and so on. So that's to make sure that we are present wherever we go. There's a team who's working on that. And of course,
Excellent.
there we'll see how to use data and how to use contextual communication, reach out to customers and so on.
Excellent. So 3 P's: performance, product, and placement. Now, if I were to ask you to pick 1 P that personally you're going to push? Which one will be? Is it performance? Is it product? Or is it going to be the placement part for growing the AMC business?
So actually, before I answer a question, there's a fourth P, which is
Okay.
internal, which is the people,
Okay.
right? So
Okay.
as a CEO, my first thing is to make sure I have the right people who have the right growth mindset, with the right ownership mindset, who take initiatives, who work as a team, and who obviously are passionate about the space that we are in. Right, that's my first. Obviously, that's the given. So within that, if you ask to your question, see, the performance part is critical to the asset management. That's my core offering to you, right?
Mm.
So a lot of my time goes into make sure I work closely with the investment team. See, I'm not a fund manager, right? But I understand data. I understand investments, and I understand. I'm an engineer by background, right? So I understand numbers. So I work closely with the investment team to ensure that the point I made, right, that the process we institutionalize the process of our investment quantum framework, because that's the one that has to continue and sustain over weeks, months, years, even after
True.
after decades, right? Because that's when, like I said, if we have to, we're looking at talking to customers saying, okay, you retire, invest in our SIP because you retire 28, 30 years later and still build your retirement kitty. So I have to make sure that my investment philosophy is stays till then, right? And if, like I said, if I go with the model approach, how do I have a solid quant model that powers this? That has to be process led. It has to, and I have to keep on, and because the market keeps changing, right? The model also has to keep evolving. So ensuring that we are up to speed, we following a process, we are robust, etc., is what I focus a lot on.
Nice.
Otherwise, I've been, if you see all my roles, I've been essentially in my earlier roles, I've been in uh, product strategy, marketing, distribution, e-commerce. So all that I understand, that comes naturally to me. So I'm a natural product and distribution guy. But in terms of the current role, well, I do all these. More critical one is the performance, which I work closely with the team.
Interesting. Let's talk about that fourth P, that secret P that you mentioned, people. Now, having led teams across various functions and companies over the years, right? If I were to ask you, what are your core principles for building and nurturing high performance teams?
So one, of course, when you select people, that's important, right? I have to have people who have a bias for action, who take the
Mm.
initiative, who get things done. And that is a critical part of the piece, right? And of course, they have to have a positive attitude.
Mm.
So that's important because I mean, again, it's cliche, but it's important because we want to build a very positive mindset. We want to make sure people are, because there's challenges. There are lots of ups and downs. There will be struggles. We are like growing with a lot of growth pains. You have to have a can-do, positive attitude, saying, "Look, we will get things done. We'll see it through." That's the first thing that you have to have a mindset, right? And when I hire people, also tell them, "We're a startup. When you're 30 years, we're a startup. So you come in here, you have to roll your sleeves up and work and build the business and grow with the business." Second, obviously, very important that there has to be teamwork.
Mm.
The collaborative approach is very important because it's a small team. It's not like a large organization, right? It's a small team, and we are working together. And if you want to build a process that finally delivers to the client, it has to be collaborative. And that is
True.
one thing that I also focus a lot of time on, to try and make sure that people engage, get together, and they support each other. That to me is extremely important. Third is I like I said, if the we are so um, linked to a purpose in some sense. But I asked them, okay, when they join in the induction key, you all know KYC, okay, know your customer. You all know KYD, know your distributor. But what is KYB? So they said, what's KYB? I said, know your boss. So who's your boss? So they gave the cliched answers. Boss is supervisor, ye, wo, Karthik, or whatever. I said, no, that's not your boss. The boss is a customer, whether internal or external. So that's the final boss, right? So you have to make sure the end customer is the boss, and you have to make sure that that's what you're working towards. It's not for me you're doing something. Don't try and please me. I'll be happy if the customer is happy. Right? So that's the key thing that we inculcate and try and make sure that is. I mean, again, the cliche is customer centric, customer obsessed, but I think how do you make sure people get the message is also important, that you work towards building a customer centric, customer focused organization. And
KYB, know your boss. Very
know your
nice.
boss. Yeah. And finally, of course, last thing is which I tell the people is that, okay, look, you're going to spend majority of your life at work, right?
Mm.
So come here with a passion towards the work. So enjoy your work. Yes, there will be pressures, target pressures, issues, which that'll keep happening. There'll be, you know, uh, ongoing stress pressure will always happen. But come in with the intent to enjoy what you're doing, right? So don't. So if you have positive attitude, a can-do attitude, and you want to enjoy the stuff you're doing, then we'll see it through. Because there will be challenges along the way. So keep that attitude. That should help us, build a business that's again long-term, long-lasting, aligned to customers, here to problem solve and make a difference.
Interesting. Now, coming to the industry, the asset management slash, wealth management. Let's call it wealth management. Now, there are a lot of young professionals, finance professionals, or anyone for that matter. This is a new industry that has opened up. They're all interested. So, for those, no, we have a lot of young audience listening, and so for those of them who are interested in joining this industry, what would be a few pieces of advice that you would give them now that uh, you have an idea about the long term prospects of wealth management slash asset management?
So I mean, there are again. So one piece, of course, like I had said, is to keep the purpose in mind.
Mm.
Um, what are you entering this business for?
For
Is
correct.
it for your own wealth, or is it for creating wealth for the people who will be serving the clients? That's important because that will make sure that you are here, staying there for the longer term and doing the right things. Second is that you have to be very open to learn and be humble about it because it is lots of, it can be complex business, lots of products, lots of nuances around the whole thing, constantly evolving. So you have to be very, very open to learn, and the more you are always learning
Mm.
at any, in this industry, in any age, you're always learning.
Mm.
Regulations change, markets change, the environment changes, products change, new products come in, etc. So that's very, very important. These two things I think are very critical to keep in mind for somebody who's joining in the industry. And then if they have these two, I think, elements, they should do well. And third, of course, is what I say is adaptability, flexibility. Because if you want to be in this space, you don't know which way the road turns. So be open and be open to, in some sense, sometimes go with the flow. Yeah, and then if it takes you, be adaptable and keep learning and keep adapting, and you'll keep growing.
Very interesting. Go with the flow. Karthik, shifting gears a little bit. Let's talk about you as a professional. So one thing that we keep getting requests is outside of work we want to understand how do they some people say meditation, some people say sports. So what are your hobbies that keep you occupied when you're not focused on your work?
So I'm more of a active outdoors person. So one, of course, in terms of keeping fit and balanced, one does the regular, you know, running, swimming, gymming whenever one has time, and there's a routine for that, right? Meditation is important, like you mentioned. That's again, you have to, in this day and age, you have to meditate to keep your balance. Otherwise, I like trekking and I like wildlife.
Interesting.
So when I get the chance to go out with friends, go either trekking um, in the Himalayas or hills, or go for wildlife treks and outings or sanctuaries.
Excellent, excellent. Finally, my question that I always ask all my CEO guests, can you share some books that have personally influenced you on your professional as well as your personal journey, and um, some insights from those books, and what would be your top 3 recommendations for my listeners?
Oh, top three. Okay. So one book I was reading, I picked up recently, was this book by Mike Minervini, Mindset Secrets of Winning.
Okay, Mindset
Okay.
Secrets of Winning.
Yeah.
Okay.
Before I came into this, in the a couple of years back, I was just figuring out, okay, trying to find some books on trading, right? And Mike is a pretty well known, I believe, well-known trader. But it's not about the trading that anyway, in this current role, one can't trade,
Correct.
as I say. But the whole thing is the mindset that's required to win was it's a very interesting book. In fact, and he's almost summarized all the stuff that you might read in any other of the so-called, self-help books and put it very well. So that's one, interesting book that I'm going through. I keep dipping into it. Very interesting. And I should read it. I would recommend to everybody who had a chance to go through it. It's a good book to go through.
Excellent.
So that is one. Secondly, it's an old book. It's your Jonathan Livingston Seagull.
Okay.
So that again different. That kind of it helps you think beyond, right, and not just get constrained by what you see around you, and it helps you grow and think beyond. So these two I can think of right away. Yeah, I think these two would be good to start off with. I think pretty good. The other,
Excellent.
yeah, the book, one keeps on going through a whole bunch of stuff that comes.
Wonderful, wonderful. Karthik, it's been an absolute pleasure catching up with you, getting to know your management style, getting to know you as a person, as well as your plans and vision for Shriram AMC, which has been pretty clear to me. I personally like the fourth P, the secret P that you have. With that, I look forward to more such interactions with you in the future as well.
Thank you so much. Thanks for the whole opportunity. I also enjoyed the entire session, and look forward to being in touch and hopefully interacting with your viewers again.
Excellent.
Thank you.